Welcome to Market Wake Up. It's 8:30 a.m. British Standard Time. We've got something really cool to talk about today. I'm going to be talking about a really interesting correlation with copper. Let's get into it.
Good morning. John absolutely hates me because, as you guys are probably aware, I usually do that intro, and I've jumped in today. I've gone, it's Friday. He's on holiday. I'm going to put him on the spot, and I'm going to make John do it. But round of applause. Absolutely nailed the intro. I'm liking it. I'm up and about. I'm keen. Copper. That's interesting. So I'm keen to hear about that. But John, good morning to you. Happy Friday. How you doing?
Good morning to you. I'm doing really well, mate. Apart from that, got a little bit of a sweat on now. You're such a natural when you do it, and then when it comes to me, I feel like I panic. So I feel, but it's good, like you said, push yourself out of the comfort zone every now and again. That's where the growth is found, as they say.
Absolutely. Musclay, thank God it's Friday. I agree. Andrew popping in as well. Paul, I'm glad you finally found the channel. I was in there yesterday to make sure you found us. Malcolm as well. Welcome in. Malcolm, I don't believe I've seen your name before. So welcome, Mary. Welcome into welcome, Malcolm. Welcome into Market Wake Up, the show where we're going to try and do our best to get you up to date with everything happening macro and even internal. And we're going to put our money where our mouth is to trade the ideas we talk about. Market leftovers. Let's get started with what's happened kind of overnight. A little bit to digest. Obviously, we had the S&B cut their interest rates yesterday just as we went live. So we've already kind of talked about the Swiss franc situation. You hijacked the whole show yesterday talking about the Swiss franc. So let's hurry past. I really like winding you up about that because you bite on it. I don't think there was really too much more to read into that. I think, as you said, that was forecasted, and I think we sit kind of at a neutral phase with the Swiss franc. In my opinion, I think it's where it needs to be, and I think everyone else is kind of like, yeah, it's priced in correctly. Like, I'm pretty happy with it here, which makes it hard for us to make money because there's no kind of obvious trade there for us to take. We're sitting there thinking, yeah, okay, fair enough. That's fair. GDP come in as expected. But unemployment claims yesterday out of the US not only beat expectations, but actually dropped. What?
Can you believe it?
I know. That's now grain of salt. We've seen the absolute revision protocol that 2024 has been. So we can't really look at this and go, yes, let's believe that number. But I really am surprised to see that unemployment claims is dropping.
Yeah, it's it could be an outlier. Let's face it, it could be an outlier. And in fairness, we have seen a drop in unemployment claims previously, right? And then it's kind of sharply rose again. So again, I think it's the grand context of it all, isn't it? This is the thing with macro. It's not what comes out. It's you get the reaction in terms of people will react to that news directly, but then after that, you've got the sort of digest of what is still going on. And I mean, unemployment claims have been hovering around a similar level for a while. So, yeah, I don't read into this necessarily too much. I don't think the market did either. If you look at what happened in the market, it didn't really budge. Even when we had that GDP figure come in and it was final 3%, I was a bit like, I was expecting a bit of a jump in the dollar, but it actually went nowhere in the grand scheme of things. It was just kind of still very, very range bound. There was nothing really, dramatic to it. So whether the market's waiting for what's coming up today, we'll have to wait and see. But yeah, it didn't really do anything, did it? Maybe the focus has been more in sort of China and what's going on in the situation over there at the moment. Maybe even so. With the I think so. Well, it's the second world's largest economy, right? So the market's focus China's basically took a little bit of the headlines away from the US at the moment, which I think they would be very appreciative of. So it'd be interesting to see if that dynamic remains the same, because obviously there's been some more talks about more stimulus in China, which has really helped sort of stock markets hit that risk on phase again. I'm going to talk a little bit about copper today.
Oh, you just muted yourself.
How that?
You are.
Okay. So what happened there? I just literally took the cable. Right.
Your microphone has dropped off a cliff in quality.
Has it?
So I've got. Oh, now you're back. What on earth is happening in Spain, John?
I have no idea. The weather's blue skies, so it's nothing to do with the weather. I can't blame the British weather for this.
I like, instantly go into the weather.
You know what it is? It's because I was going on a rant, so that it automatically just cut me off now. But yeah, anyway, so more stimulus in China, basically. Have you actually seen that they've now opened it up to non-residents can now buy properties?
Yeah.
That's quite interesting, isn't it? Because that's a big step, I think.
That's scary. Look, there's a big problem. Big problem. We've touched on it for months now. Now it's not something we trade. It's not something we really expose ourselves into those the Chinese real estate. Might be worth looking now. It's cheap, pennies on the dollar, right? Might be interested to get involved. But yeah, I think the scariest thing about this kind of Chinese stimulus, and it's needed, there has been a bit of a money printing problem in China, and they're trying, Xi Jinping is really trying to bring Chinese economy back to a credible spot where people can go and invest in. Seeing this collapse is not good. It's not good for what they want. Now, housing market's falling through the floor, and not many people are wanting to buy and be invested in this. The problem with that as well, compared to other nations, as we touched on, residents, 60 to 80% of general citizens in China, their net worth is built up through real estate. So you might think a similar thing in Australia or in Britain, in Canada, or in the US, but the equity of general civilians is actually quite evenly spread between real estate, between ETFs, between pensions or supers or 401ks, whatever you want to call them, and then also spread into obviously your real estate, your stocks, and anything else that you kind of invest in there. In China, it is heavily concentrated in real estate, to the point where I've mentioned there that 70 to 80% of everyone, the average portfolio, is in real estate. So to see real estate be dropping off a cliff is not good for the residents and citizens of China, because that means their equity is going through the floor as well. And yeah, it's not a pretty sight, because I think it's going to lead to a lot of people getting hurt.
Yeah, and then there's this kind of balance of risk in terms of, is this going to be stimulus that everyone wants to go and support and get involved with, want to invest into, or is this stimulus that we need to be very, very worried about, and is this going to be like panic stations and whatnot? Now, I feel like the stimulus has been quite aggressive from China, so that there is that element of there is a bit of risk there. I feel like it's a good risk to potentially get behind, personally. But
let me ask you a question. You say you think it's quite aggressive. Does that mean you think it's unwarranted?
Not necessarily unwarranted. I don't. To be honest, I probably don't have enough details on it to say whether it is unwarranted or not. I'm just kind of going on how perceptions can be taken from this. Usually we talk about the Fed, right? We talk about the Fed cutting 50 basis points, and we say that is a big leap, because if you look in history, X, Y, and Z has happened, which follows it. Is it a similar situation here in China as well? But they've got to do something, right? They can't just let it run away, right? So they've got to do something. It's just whether the market sees this as a really good chance to be an investor, or do they see it as a real big chance to go, something's really not right here? It'd be interesting to see how this unfolds in the next couple of months, I think, because seeing the S&P breach all-time highs, then you've got this kind of property situation in China. It was almost like the opposite in 2008, right? A lot of foreign investors in China and Japan were investing in the US housing market, and that's when it really kind of came crashing down, so it's kind of the opposite this time. Are we going to see a big investment from foreign entities into China, into the property boom there now? So
maybe this is the picture. This is the puzzle we're trying to figure out. Let's add some fire to the puzzle, and let's get into what charts are doing today with freshly squeezed. Okay, so let's get through the prices. The VIX actually a bit of an uptick, 1570s, pushing a little bit higher. See if we can get up in and around those 16s. I want to see it at 40. I just want to see the mayhem that it unfolds if we get up to 40. To be honest, I think it's going to be an interesting ride. Don't have exposure to that really. I think it's going to be fun. Aussie dollar down 0.2% today. Euro down 0.4%. Euro finding a bit of weakness. The pound as well down 0.4%. US dollar CAD up 0.2%, and US dollar Japanese yen down 1%. The XJO fallen off a little bit, closed down 0.3%. The DAX down 0.1%. The Nikkei down 4%. 4% at the Nikkei today. Interesting. We'll touch more on that in a little bit. FTSE up 0.14%, and the S&P 500 as well down 0.13%. Coffee finding a bit of strength at 1.9%. Gold down 0.3%. Nat gas up 0.3%. Silver down 0.8%, trading in around those 3170s. Sugar down 2%, and oil up 0.19%. And Bitcoin 0.4% positive, and Ethereum 1.02% positive. In terms of bonds, not seeing too much move. The Aussie 10-year yield sitting at 3.9. The US 10-year yield sitting at 3.76. So not too far away from each other there either in bonds. Going towards that Nikkei, it is, wrong one. It is quite interesting to see the reversal candle, we like to say, that we have seen a huge sell-off. I'm not sure what's caused this huge sell-off today in the Nikkei, but it is quite an interesting. Ooh, you do.
New Prime Minister in Japan.
Oh, that is a big one. How have I missed that?
It kind of did fly under the radar for me. I must admit, I only knew about this morning because I was flicking through some news reports and it came up. But there has been two candidates. One candidate, I can't remember the names. One, I think Takachi, but I don't want to butcher her name. She was basically saying that the BOJ were hiking rates too quickly. Right. So we've seen a little bit of a softer yen recently because she was leading in the polls, right? Or leading in the first round of the elections that they have. Second round of elections, she got absolutely annihilated, I think. So basically the yen has had a quick turnaround because the person who's now being, I think it's re-elected. I don't know if I'm butchering this as well. I only had a quick moment to read about it. Is more on the side of the BOJ rather than the opposition. So starting to see a little bit of downside, or a little bit of upside, in Japanese yen across the board, really, which is quite interesting when you consider the seasonal plays that we've talked about for a while. So it's funny how sometimes news can just relate to what's going on in terms of seasonals. It's really weird. Yeah. It's really, really weird.
So strange that you can read a report that comes out saying, hey, this is the reason we're going up. And it's like, hang on a minute. What? This is strange. But I love seeing those things. If there's anything I can teach anyone, right, that I've learned in my career in trading and macro here, is no one has any idea what is going to happen, right? And I don't us included, right? Yeah. No one has any idea what is going to happen. They base their bets on opinions. Now, what's important is you listen to people who back themselves. Listen to people who actually place the bets on their opinions. They don't just sit there and be a pundit. And I think that's important. And that's what I think our USP is with Market Wake Up is we sit here, we talk about positions, we ask where's the trade, we execute on the trade. And I like that because we do this to actually help each other, less help everyone else. We just kill two birds with one stone. That's one thing this has taught me. I mean, you look across some of the big media outlets and the people that they get on with these big prestigious titles, and they sit there and they'll say X, Y, Z, and you just look at it and you go, you are just full of rubbish. I mean, like it's just the worst thing I've ever heard. Like it's just, that's why if anyone can take anything away from this episode, it's everyone is full of BS. Enjoy that one. Let's get back on the positive. I still like the yen strength. I still think yen's going to find a bit of strength. I still like that play as well, even at these lows. I reckon we can even retest down these lows, the 139s. Excuse me, get into the high 139s. I think that can be interesting. Freshly squeezed. Looking ahead of today, the biggest one for me, obviously PCE, is expected to fall a little bit short, 0.02%. We know this is something the Fed love. The PCE index is one that they have openly said time and time and time again. We watch it and we care about it. Any bold statements heading into PCE this afternoon?
No, not really. I'm not really expecting anything again, I don't think. Well, it's interesting, isn't it? Because the market hasn't really moved on any big data this week, especially the US dollar. I don't feel like it's just done anything. So maybe core PCE is the one that we're focusing on. We know that obviously the Fed have been talking a lot about this, and I'm pretty sure they see some decent declines in their forecasts of core PCE in the future. So I'm interested to see how, if there's any shocks, right? Because that's where the trade's going to be. It's not going to be in the forecasted data. It's going to be if there's any shocks in that. If there's a shock to the upside, and I think dollar gets supported, and we see a little bit of that influx of US dollars that we've kind of been expecting for a little while. If we see some downside moves, then I don't think the market's really going to react too much to it, to be honest. Maybe we try and take some lows out, but other than that, I don't really see much going on today. Again, it's a bit of a non-event.
Yeah, so digesting that is investors are forecasting we will get downfall in PCE, expecting to get downfall in PCE. They're only going to get caught out as if PCE climbs. That's what I've digested there.
Yeah, perfect.
That's your opinion?
You say it way more eloquently than I do.
I'm just picking your parts and putting it back out there. Like I'm just listening to what you say. It's the best part of the day. It is the best part of the day by far. It is time for the big bite. John, you said copper.
Bites.
What do we have?
Right. Now I'm going to share my screen. Hopefully it works, being on just 5G. So I'm hoping this works. So bear with me. Let's talk a little bit about copper then. So copper obviously can perform well when China's performing well, right? China imports, I think they're the biggest importer of copper. They use it obviously in a lot of manufacturing, X, Y, and Z. So if we're seeing stimulus and whatnot in the housing market, and because I know there's a lot of sort of developers in China that have gone down, right? So there needs to be sort of some stimulus there, bring developers back, keep developing those unfinished properties, X, Y, and Z. Then copper is seeing a little bit of benefit from this. Now, there's also a little side link to this, but I was looking at sort of copper from a seasonal performance as well, and there's actually a seasonal long on copper in September, which I didn't know about. So when I was researching the impacts of how this has happened, I was like, okay, I'm going to go check the seasonals, see what the seasonals are doing. Is there any kind of confluences there? And yeah, seasonally, there is a little bit of a boost to copper in September. Now, that's when I kind of have a little look around in terms of, I had a few sort of what if scenarios, like what if August is bullish in copper, what if September is bullish, and you get sort of these kind of potential exponential moves in copper then. Mm-hmm. But obviously the copper could get basically an inflow from what's going on in the situation in China at the minute. And then it kind of prompted me to think, well, okay, as a currency trader, how can I how can I benefit from this? How can I try and back myself if there's any kind of correlations with copper? So I'd like to know your thoughts. I'd like to know everyone's thoughts in the chat. There's a purple overline, right, that you can see on the chart here with copper prices. So the chart, the price chart is copper, but the purple line is another chart. I'd like to know your thoughts on what currency pair this is.
It's a
Or
currency
what do you think
pair.
it is? Yeah.
Ooh.
And it's very, I feel like this is very left field.
Oh, okay. So I need to think like outside the box.
A little. You can think about what currencies perform well when China performs well.
Yeah. Okay. So immediately I think Australia, but then I know the Aussie dollar is not priced at 53 cents. So I'm moving towards maybe. Yeah, probably. But I'm moving towards maybe the New Zealand dollar. I haven't looked at the New Zealand dollar chart in a little while, so I'm thinking in and around those 53 to 54. I find it hard to believe it's going to be US dollar CAD. I don't think we're going to be in and around US dollar CAD at all. So yeah, I would go with New Zealand dollar.
It's New Zealand Swiss.
Ooh, wow, okay.
It
can I know what the New Zealand dollar chart is?
Yeah, 89% correlation with copper at the moment.
Wow.
Don't you find that really fascinating? So I was looking around. I was like, how does this have? I don't know how, right? I don't know how this correlation is here. I haven't done that much digging research because I'm on holiday, so I haven't been able to kind of deep dive into this. But obviously, we could impact of like you said, the Australian dollar usually performs well when China's doing well. New Zealand dollar as well. You know, I did kind of look at the Australian dollar as well, trying to see if there was any kind of correlations there, and there was actually a minus 93% correlation with Euro Aussie. So that basically means when copper is performing really, really well, Euro Oz tends to drive lower, and that's a really strong negative correlation there. Okay. So I was kind of looking at that one as well. Yeah.
Now I'm pretty confident to say New Zealand dollar aren't big exporters of copper, right? I know it might be part of their exporting, but I also know their major export is dairy. So I'm pretty sure in saying that correlation shouldn't be heavy there. What I do find interesting is in this the Swiss franc, seen as a safe haven asset, and then New Zealand dollar, Aussie dollar, which is that other like commodity-driven currencies. Commodity-driven currency. Usually, if commodities are doing well, those currencies will do well, and vice versa, the opposite. So I'm going to lean into that being the reason for the correlation. Not that it matters. Might matter if you just care for information. But I would lean into that being the correlation with it just being commodity currencies.
I'm leaning into that as well. I'm leaning to the fact that commodity currencies are going to perform well when commodities are doing really well. Say again?
It's very fascinating. I
thought you'd like this chart.
Yeah, I like it. Okay, let's kick on.
So I think that, basically, this is I just wanted to kind of highlight this as a way that traders can think about how they can get involved, not necessarily directly with a market, but with a correlating asset. So like I said before, when China does really well, we usually see the inflow into Australian dollar. I'm actually sure Australia are the 5th biggest importers of copper. I might butcher that, but it's only about 5% at that point because China has like the dominance of it. So I think it's only like 5% at that point. So I'm not 100% on that.
Unsure.
I'm pretty, unsure. But I just think this could be a really
it's used in predominantly in batteries now, right? Like it's a really sought after asset because everything's going electric.
Yeah. So the electric modification would be sending copper through the roof essentially. like we talked about before with silver and China as well, with the idea that they're going to heavy invest into renewable energies, and silver is only a byproduct of a metal mining. So it's kind of a scarce commodity.
I've got the figures from 2022. Which are China at 58%, then Japan at 14%, Korea at 7%, India at 3.4%, and Germany at 2.76%. But what I have found, and this might be where you've seen the information, is Australia at 5%, 4.15% export.
Export, that's it, right? Sorry.
So we do have a big mining industry, so that would make it a little bit more sense.
Yeah, there you go. Sorry, I was butchering that a little bit. But yeah, so that's an interesting chart, I feel, for me. This is how I feel like I could get exposure. If we look at sort of Kiwi Swiss at the moment, it's only really just kind of broken into the highs. If I just kind of put back on the let's actually go to Kiwi Swiss. I hope my laptop will allow us to kind of do this in a little bit. Well, it's working for now. But yeah, Kiwi Swiss at the moment, it's broken into sort of fresh highs, and we've just taken out these swing highs here at the 53.20s. So that to me is, we're fairly bullish at the minute. We're moving back into an upward trend. We've broken through this kind of trend line resistance that's coming on at the moment. Quite like the resistance up at the 54s, which was this low that was back on the 18th of June. So kind of looking at sort of a 4-hour time frame here, we can see, look, we're kind of coming back into this sort of demand zone here. If we saw any kind of significant changes at these lows, then we could look for short-term ideas back up into that 5400. So essentially we could look for a little bit of a move, which would consist of like a bit of a bottoming pattern, and a move up into that 54 sort of 100 area. So I'm going to keep an eye on this sort of correlation here and make sure that it continues, because obviously correlations can fade in and out, but the correlation has held for quite a while. It's actually been since sort of the market started to drop here back in May. So we've had a pretty strong correlation since May. So I thought that was quite interesting, because it's not like a correlation that's just been around for, a couple of weeks or so. It's been for a decent amount of time as well. So I thought that was very interesting to have a look at. Like I said as well, if you go to Euro Aussie, minus 93% correlation there. So you want to be looking maybe at the sort of opposite move on Euro Aus to copper. But yeah, I just thought it was an interesting chart to show you.
Yeah, no, I love that. I love correlation hunting. I really do. I love looking at what assets move when other assets move, because you can expose your trading in various different ways, right? You don't have to be directly associated to one asset. You can look across the board, and that's why I was so happy when Barry threw in his lumber review yesterday, because I was like, yes, we can have a whole team of people kind of looking at some of these correlations and expanding the minds and everything of everyone, which I like. I struggle to see from a seasonal point of view copper long. I know there is a little bit of strength in September, predominantly in the last 3 years, which is better. At least October right the way through to December seems to be a very positive move. The further I go back in history, the worse that trend gets, which can be taken with a grain of salt, because we want more realistic and recent times, and especially since copper's found this new life and all of a sudden the prices have gone through the roof because now we're going all electric everything. I think that is an interesting play. What are you doing? Are you going to execute it, or are you just like the correlation?
No, I think if being a Friday, I might avoid it today. But if Monday morning I'm here and it's still sitting towards these kind of 53.20s, and over the weekend we've seen a digest, what I'm worried about is next week China on holiday. It's Chinese bank holiday next week, and it's or public holiday, and it's all week China out of the market. So will we see a kind of just a pullback in general on these type of markets, just because there's no necessarily big influx from China coming in and trading this, or the Asia market?
Yeah, and that is a little bit scary. Now, Is it going to make a difference? Because they randomly just cut the loan rates out of the blue anyway. They did a Bank of Japan. Why not do it when your markets are closed, eh? Everyone has time to digest by the time the market opens. I can see the angle. It's a little bit concerning. I'm going to leave you with one little take it to go, right? Fill up your takeaway cup, or throw it in your car through your drive-through, drink it on your way to work this morning, drink it on your way to your trading. He's already finished his coffee. One little take it to go. It's a nice little seasonal play once again. Aussie dollar, US dollar, 75% win rate over 24 years, which is decent for currencies, might I add. Aussie dollar to the upside. You can see here on your screen, 75% win rate here, average return of 1.3% from the beginning of October to early November, over 24 years. We do get a little bit of a drawdown in and around those 2% of recent. However, the max rise is also a lot more than what we have capitalized on. What that tells me is get out of the position when you're at around those max levels, because by the time we get to the end of the seasonal play, it's not as good, right? So take it while the money's given you. You can see the max rise hovers in and around those high 2s all the way up to 3%. While the average return is 1.3, the max rise is around that 3% average, which tells us that majority of the time we do get up to that 3% and then pull back in. If you get up to that 3%, take your money and run if you take this position. But Aussie dollar long, we like US dollar shorts. We like commodities long. I think this is a great little take it to go.
Okay, a lot. Sorry, I got
beautiful
a fly around me.
Sorry, the stink. Throwing me up. But guys, that's it. Another week, the first week here at Market Wake Up. And I want to thank every single person who's been tuning in, watching us, commenting, joining the conversation, and leaving a like as well. It helps us incredibly. We really want this channel to grow. So if you can share it with a friend, make sure you do it. Subscribe, turn that notification bell on, and help Market Wake Up get part of every trader's morning routine, because we believe this stuff can increase your profit tenfold. Why? Because we've done it ourselves, and we sit here from our experience telling you it can. These conversations are important, they're fun, and we want you and every single person to be a part of it. So without further ado, go enjoy your weekend, take some time away from the chart, spend some time with your friends, your family, go to Spain with John, and we'll be back Monday 8:30 a.m. British Standard Time to do it all again.
Thanks, guys.
Cheers.